Good evening, everyone. I am Anna, and welcome to the Money Date Wednesday. So I am in the mood of something like So What? And I've got Pink here playing a little bit on the background. But I want to get in with you talking about our finances. Every Wednesday we get together because this is a friendly reminder you get from your friend Anna, who cares about how and what you do. Max moves. Anyway, so I want to talk about a reminder that I think we all deserve to have. And so every Wednesday, we need to check on and see how things are going with our finances. You've been working hard. You've been saving hard. Hopefully, you haven't been spending hard. As you hopping on, I'm excited that you're here in the chat. Please drop a comment or two. That way I know you're here. Otherwise, I can't see you. I appreciate you watching live and spending your precious time with you. So my reminders are so far is that we need to understand where we've spent our money. Hi Lauren, good to have you here. We need to understand where we've spent our money over the last 7 days. We need to understand how much income we've generated and created. Some of you are business owners, some of you have full-time jobs, some of you have full-time jobs and businesses on the side. So how all of that is doing. Staying on track and having little tidbits of that information as you go through your day-to-day, week-to-week, month-to-month helps you to stay focused. That is the whole idea why I created a money date. Now, today I want to talk about life insurance. I know that, hi Inga, good to have you here. Life insurance is by far one of my favorite topics. It happens that today I had, I think, 3 meetings. I had more than 3 meetings, but at least in 3 of those meetings, I had to talk about life insurance with all kinds of various clients as far as their ages goes, from the young couple starting out to a couple that is getting ready to retire, but they're not quite there yet, and we're looking at getting them more life insurance. It is one area where everybody most underinsured. By the way, I have my collective sign in the back, so I've had it up ever since our our big event in St. Louis 2 weeks ago. And so when the boxes finally arrived, I wanted to show Yuri what it looks like because he hasn't seen it. So it's been sitting in my office, my home office, just kind of reminding me about collective and this little project that I got going on. So, but anyway, I just thought it's a good prop in my background. So, all right, life insurance. You guys know that, and I hope you do, but if you don't, here's a reality check that you buy life insurance not for yourself, because at the end of the day, when you're not here, you really don't care. But you buy it for the family, you buy it for the people that you love. And so I want you to think about that, right? Because a lot of times we just don't realize that we may be not having enough coverage to make sure that when you're not here, and if you have obligations, if you have dependents, and if you want to provide for your family, that's what that particular product, it's a financial product, helps you achieve. Now, most clients that I work with are evolved around what's called term insurance. It's a life insurance policy that is good for a certain amount of years. It could be 5 years, 10 years, 15, 20, 30. 30 is the longest I've seen. So because for most of us, the needs of making sure that our family is covered and protected are going to fall somewhere on that spectrum. Now, this month also happens to be, for us at Main Street, all kind of focusing on open enrollment season. I talked about this last week. Open enrollment season is when you, if you work for an employer, right, if you work for another company, look at your set of benefits, right? And it's usually a period of time when you get to make different choices, right, with the benefits that you have. Life insurance happens to be one of those benefits that your employer provides to you, right? Hopefully. Or if they don't provide it to you, there's an option for you to buy it. So I wanted to kind of talk to you about what do you do, right, when you find yourself, let's say a very typical example is that you get a coverage that's offered by your employer, whether it's paid or it's paid by the employer or it's something you have to buy. Let's say it's 1 times your salary. Pick a number. I don't know. Maybe you make 100,000, maybe you make 200,000, or maybe you make 500,000, right? There's always a cap, by the way, like the higher earners. And so think about, if you were to disappear today, is that going to be enough coverage, right? If that's all you have and you've considered getting more, is that really going to be enough to provide for your family? So that's number 1. Number 2, you can actually get more coverage. Now, open enrollment season usually, hi Wanda, happens around October, November for most employers, right? Some are kind of off season. That's when you can actually opt out to get more of this kind of coverage. But I want you to sort of get the distinction today that I want to bring to the table for discussion is about getting the life insurance coverage through a group policy, right? That's the one that's provided by your employer, or figuring out how much you actually need and going out on your own and buying a private coverage. And so kind of weighing in between what actually makes the most sense. Now, as you happen on, say hello. I'd love to hear how you guys are doing. And a question for you to think about. I would love to know what has been your money win for the week. So mine is, I shared with you last week that I have a new colleague, Cynthia, who's an advisor that started working with us in our San Francisco Bay Area locations. And I now have a colleague to work with in my office, which I have not had for the last 8 years. So I have a new colleague. We've been working on getting kind of our office redesigned a little bit and setting up, our desks and just making sure that our space is set up for the 2 of us to work, and then also to hold our client meetings. So it's been an exciting transition because I feel like I have to step up my game in terms of showing up there, being the best, right? Plus I'm training her on a lot of the stuff and what we do. So it's been an interesting experience. So I'm particularly excited for that transition. So you're gonna hear more about that. And I am actually gonna bring her on for one of these discussions very soon. As soon as she's onboarded and ready to chat, we're gonna have our little joint show. So hi Wanda, good to have you here. I hope you're doing well. So think about what your money win for the week has been. I know that there is something that really has taken place that you can pause back, reflect, and appreciate. And so circling back to the topic that we were discussing, group life insurance, or do you get additional coverage if you feel like you don't have enough? And I, again, repeat myself, but I know that most people don't have enough. Do you go out in the private space and get a coverage or policy for yourself and your loved ones? That's who we're getting it for. Or do you go the employer route? So just to kind of explain what happens when you get your policy, right, from the employers, when you just rely on the coverage that you get through work. That particular coverage, so there's a few drawbacks. If you leave your employer, right, if you change jobs, most of the times that coverage is gonna go away, right? Because there are some plans that are portable, and some employers will allow you to carry that coverage with you, but most of the times they're not. So if you've been relying, and as the landscape of the whole job market is so different today than it used to be back in the day, where perhaps you worked for one employer all your life, right? And it was a secure job, and so you can rely on those benefits. It is not that anymore, my friends. And so if you're changing jobs often, relying on coverage from your employer is something you need to think about twice. Now, I'm not saying you should disregard the coverage if you get it for free. Awesome. Keep your 1 times the salary. But I need you to think about, what are the needs of your family, right? So if you were to disappear, not only we need to replace your income, but what else do we need to worry about? For most families, there's a mortgage in place. For most families, right, especially younger clients that I work with, the ones that are just starting out, that are buying homes, starting families, there is that, right? There's the plan for how are your kids going to be taken care of if you're not here? Are they going to go to college? Are you planning to fund that? So I need you to think about those things when you're coming down and sitting down to think about, well, how much more life insurance do I need? And what I propose for you guys and gals is to look outside of what the employer provides and consider getting a coverage that is portable, that is yours, and that is underwritten, right? Underwriting means insurance company looks at you as an individual and says, I am willing, right? I am whatever insurance company, I'm MetLife, Transamerica, whatever, right? Whatever the insurance company is that says, I'm willing to take bet on you as an individual because you are in good health, you are a certain age, and this is the kind of premium we're going to charge you. Therefore, the policy is yours and you get to keep it for however long your term is. So is it a 5-year term, 10-year term, 20-year, or so forth? The longer the term, that's one of the things to think about. The longer the term of the policy and the higher the amount is, the more cost it is. But term insurance, right? And I know that some of you might have heard or come across policies that are, for example, permanent, right? Whole life, universal life. Those are the frequently thrown out terms. Variable universal life. Those are more complicated kind of policies, but they all have a feature of a term. They all have insurance as an underlining factor, but then there's more stuff thrown on the top of it, like investments and more than that, so that it makes the policy, right, attractive from the standpoint of an investment. But I'm talking today about a very simple thing. Insurance, because you want to make sure that if you're not here, you've provided for your family. So considering getting coverage, considering getting more coverage is number one. Considering getting coverage through private channels where your policy stays with you is something that I want you to think about. And then if your employer does offer options for you to extend your coverage, right? And you may not be in the best physical shape, right? Or you may be of a certain age where you don't, where that would be a disadvantage to you and you don't want to go through the underwriting. That is one option. So like to give you an example of the clients that I was working with this afternoon, they're in their early 60s, but because they still have a pretty sizable mortgage and they need the next 3 years for them are very critical, and they need to make sure, right? This is insurance is for those kinds of needs, is when you need to make sure and absolutely guarantee the success of what you're trying to accomplish is gonna be backed up either by your abilities to save and earn, and if you're not here, it's going to be covered by the insurance. So for this particular couple, it was just because our timeline is short and we need to make sure that they get to their retirement phase, right? They work their plan. We're looking into getting them more coverage, but our timeline is short, so therefore we can maybe get them 5-year term policy, right? With a certain amount. So that should help keep their premium at a certain amount, right, where they can afford it, because what the big disadvantage for these folks right now is their age, but you cannot do anything about the age, right? So think about that. Now, if you, and this came up in the meeting today, I want to share this too. If you're like my clients who are, getting closer to retirement and you have kids, or maybe perhaps you have grandkids who are of that kind of a situation when they're starting out and they have responsibilities, educate them on these kinds of concepts. Let them know that these things are something that can be put in place and it costs very little when you do it at a younger age. So I want you to ponder about what makes the most sense for you, but don't forget that relying on coverage from your employer it shouldn't be your ultimate plan. It should be your plan B, but the general plan, right? The one that you're going to actually feel good about shouldn't be that. So that's my kind of a outline for today's discussion about getting more life insurance. Throughout this month, I wanted to just kind of lay out. Hi, Jennifer. Good to have you. I'm going to be talking about all these kinds of things related to open enrollment season, life insurance, disability, retirement plans. It is crucial how you can actually prepare and set yourself up for the next year. You guys, today is the 10th of November. October. Not quite November. So what I'm trying to say is that the time is going by really fast. Hi, Neer. Good to have you here. And I want you to make smart decisions. If you haven't done them last year, this is the time to do it. And so for those of you hopping on, glad to have you here. Let me know by saying something in the chat. Also, do share your money wins. And so what I wanted to close with is a quote. And it's kind of in the space of personal finances, right, or finances in general. The quotes that I'm usually reading are all about sort of like the hardcore, the numbers and things like that. But because we were talking about life insurance and I think really understanding why you need to be concerned about, having enough coverage, I think this quote kind of ties it in really close. So this is by Larry Page. I hope you know who that is, a co-founder of Google. But he says, always deliver more than expected. And so I want you to think about what can you do today for your family to make sure that if something, God forbid, happens to you, they're taken care of. So deliver more today so that you're not concerned about it tomorrow. I think it ties in really close. Thank you guys for watching. Let me know if you have any questions, and I'll see you next week. Bye for now.